guys, I am back. Okay, so let's see. I wanted to. 1 second. Oh, that was me. I'm sorry. There has to be a better way to do this, you guys. Okay. Should have been prepared. Okay, let me go mark here. Want to see that little sliver of real estate down here. Good. All right. So it's Saturday morning. Stock talk. Huh? I think it's pretty good. Good week to talk about GameStop. Every week is a good week to talk about GameStop. I know I only have one thing in my mind right now. Is GameStop. Can't stop. Won't stop. GameStop. Huh? My slogan is terrible, you guys. Okay. So, what is the charge for today? I can't even talk. What's happening? So it's 10 o'clock right now. I know a lot of people might not be awake yet. Oh, Carter's here. All right, now I can start the show. Yes, I feel a lot better now. Thank you. Appreciate you. How are you doing this morning? How's Selena? Little baby. Is she sleeping okay? Okay. All right, let me get everything kind of set up here. Honestly, I'm just gonna waste some time here. I have no idea how long I'm gonna be on for. As far as information wise, I know, we're in here for GameStop, but sometimes I feel like, let's talk about something a little bit different. Huh? GameStop's gonna do what it does, do well. I mean, everybody's know that by now, hopefully. If not, that's their loss. So I wanted to, hold on, the trading view. That's what I want to go to. I want to look at the chart. I'm sure people are going to come out and do all the technical analysis. I'm no different, so let's go through that together. Huh? So let's see. Boom. She's great, sleeping also. Oh, that's so sweet. I love it when babies sleeps. They don't cry. I'm running between baseball game with kids and listening in. Oh, that's amazing. Well, thank you. I mean, pay attention to your kids, though. Don't worry about the show. But I appreciate coming in. So, always. It's nice. Okay, so let's go. I'm thinking about, let's see. Give me 1 second. I'm looking at my screen right here. Okay, so currently, again, don't do what I do. Okay, do what I say sometimes. Okay, because it will save you a lot. In my gambling, gambling nature. No, I'm kidding. In my what is it called? Option portfolio. It's getting decimated at a moment. But again, it's just a portion that I do allocate so that I could kind of gamble a little bit here. Not much, you guys, like, a couple contract here and there, but sometimes I do go pretty heavy. So currently, the IV on some of those are dropping. I'm hoping that next week is going to be crazy. If not, I might have to close these at a loss. So currently, I'm losing $200, and the whole option portfolio here is like 1,000. So, hey, it is what it is. 20% down. That's not too bad. So, but some of these plays, like so I have a higher strike price right now than I used to. The one that I play before was a lot. I closed those out a little closer to the date. So currently I have um, the 7th of February. So let's go to that one. Chart exchange. February 7th. So this is the one that I choose because again, I usually gives myself a little bit more time on this because the weeklies are pretty wild. I know these don't have too much of implied volatility unless it goes, berserk on next week. And of course, I'm expecting good things for next week because look at this, right? So oh wait, hold on. That's not the one that I'm looking at. I'm looking at this one right here. Sorry. So by this particular chain, you could see right here. The problem is that the max pain is very low. And it hasn't happened that way for quite some time. I notice a lot in that sense. Oh, hey, what's up, everybody? Thank you for joining. Gabriel, hey, I haven't seen you in a while. What's going on? What's going on? Appreciate you coming in. So with this option chain though, max pain is very low. So what does that tell me? It tells me perhaps they have not hedged. Okay. If these calls are sold naked, of course, I don't know that, speculation, I'm hoping that they have the shares to back that up. Okay. If they do, no harm, no foul, right? But if they don't, something's going to happen here in this week. But again, please don't make any trade based on this. I'm just speculating, you guys, okay? I'm not telling you to do whatever. Do whatever is best for you. If you are an investor, obviously buy shares. Buy shares. I mean, I've been accumulating shares. I have my bag already. And, I do add from time to time, but right now, it's in my Roth. I already max it out. So, of course, I can't do that. If I wanted to, I have to add through my option chain or, my option portfolio. And I do have, quite a bit of shares that I have in my trading account as well. So, majority of my my portfolio is in Gamestop in forms of shares, and only a sliver of it is in option. So, again, I'm trying to play the volatility game as well, and hopefully, I get some more shares. The name of the game is, try to get more shares as much as possible. So, but currently, I have a lot of calls, more than I usually have. So a total of 9 contracts so far, sporadically in different strike price here. So, what I'm hoping to do, I'm not holding these calls for long terms, you guys, so, if I get some profit, I'm just gonna X out anyway. I really don't care how much I make from option. It's just to see if I get it right. I make a mistake of like selling way too early a lot of time, and so but since I have shares, I don't really care so much. Whatever option does, of course, if I could get 100 shares of GameStop from this option play, of course, that's going to be a sweet deal to me. And so why not? But of course, I could lose everything that I put into. So please don't sell your, soul, don't sell your house or whatever to put into this. It's irresponsible. The most responsible thing to do is just to dollar cost average. That's the best piece of advice I could give anyone. In any security, you don't have to put into GameStop, okay? Whatever security shoots your boat, just do it, If you love NVIDIA, go ahead, but make sure you have a long-term plan. That's all. But anyway, sorry. Hey, what's up, Lina? How you doing? I haven't talked to you in a while. Yeah, I might call you later. So, all right. So, anyway, just to preface this ahead of time, again, I don't want anyone to lose money on this because, like, it's stupid. Like, if you've been following GME for a long time, and if you lose money, that's on you. Because you have so much opportunity to add at a lower price, before Roaring Kitty coming back, right? And so it's such a sweet opportunity, from here to here, in my opinion, right? So everybody has their own opinion. I'm sure people are trying to get you to buy into other plays also. Is going to come back, and mind you, I feel like when GME going to explode or about to run, right? They usually push other play to get you to buy into other stuff, right? Rather than buying into GME and all that stuff. And of course, they will push the narrative about oh, it's gonna go forever until the end of time. Or run's gonna run, right? Just be careful. I'm not saying it won't. If you're in here for a long term, and let me just say here, okay, I'm here to invest in this company for the right reason, okay? Fundamental. I mean, currently, okay, I have, never mind. I'll do that later. But my point is, I just want people to be careful and be responsible. That's it. All right, Lina, what's up? Okay, good. Good to hear. All right, so let's see. Where was I? I got sidetracked, you guys. Okay, let's go back to option chain here. So for next week, look at this. $40 strike price. $35 strike price. If it reach 40, look at the amount of options that is going to be in the money. So currently, look, options in the money right now, it's 100,000 already. So that's representative of 10 million shares or so. If it runs even higher tomorrow due to hedging or whatever, or here's the thing, they could also smack it down so low that my option that I'm playing right now is going to be out of the money, sorry. It's going to be cheap. Okay. Now, depends on the volatility too. If the volatility is so high because people are just betting, up and up, gamma ramping this thing up, my option that I bought at this strike price here, at this level, is going to be worth a lot. So that's what I'm waiting for. Currently, I paid, let's see, what's my cost average for this one? 360 for this one. So technically, I'm in the green and not losing that much for that one. Closer to the money. The other one I bought on the 60 strike price, the same chain right here. I paid 120 on that one, but then I kind of dollar cost average on that one too, just to bring my cost average down. So I add one at a time, you guys. So for this chain, for this particular one, I have 6 contract on that one. Again, throughout the day, when I see the dip for Friday, I was like, okay, let me try to get myself in here. Again, this is totally gamble, you guys. I'm not saying it's going to go up to that, but if it does, I'm not mad at it. Again, as far as shares, of course, I'm not going to sell until 100, like all-time high. Not quite sure how long it's going to take, but I have a feeling it's going to reach that, no problem. Whether it's 10 years from now, 15 years from now, or 2 days from now, I'm here for it. Okay. So my strategy is, to have a long-term back. I have one where I will hold forever, because it's in my Roth anyway. I can't touch it. It's going to be there for, whatever, 10, 15 years, who knows? And then I have a portion where I'm going to play with this as well. So again, just my strategy, because, everybody has their own. Will I add? Well, I have a strategy on that too. So anything under 50, I would say it's a steal, because it's fair value, in my opinion. 5 times its book value is pretty good. Okay. And then you have, let me see. And then anything in this range, I would kind of slow my buying rate from here to here. From here to here, I just buy slowly. Sorry. Buy whatever rate you're setting yourself, So for example, if it's $200 a month, then you just buy $200 whenever possible down here. If you used to buy $200 a month and the price trading at this range right here, then you lower the rate, cut in half or something, right? There you go. So again, I'm doing this in order to accumulate shares over the long haul. Okay. That's my strategy. And then the trading account, obviously, I use that to, fund whatever bill I have to fund, vacation if I have one or anything, right? So I'm fortunate enough to have that, that done or whatever. Anyway, what am I saying? Oh, wow, there's a lot of people here. Hi, you guys. I'm just babbling and you guys are here. Thank you. Appreciate you. Okay, GameStop next week, a lot of hype. I know. I'm trying to de-hype people a little bit because, again, people have dates and all that stuff. And, sometimes you have to ground yourself in reality. I'm not mad at it if it's going, to the moon tomorrow or 2 days, in 2 days. It's okay, If it does, hey, I'm happy. If it doesn't, I'm also happy. You know why? Because I have a lot of shares accumulated already, in my portfolio. So, but yeah, if you're here to get hyped, I'm sorry. I'm not a hype person here. Okay, same as, all right. I respect that. Because I can, thank you. So happy I stumbled on your channel. Listen for, okay, great. Thank you so much. Appreciate you. Yes, I'm always fortunate for people to promote my channel because I've been here talking about GameStop for, I think, 2 years now. Yeah, on here. And again, whoever promoted, that's great. I'm not promoting myself. Usually, again, like I kind of want it to be organic. Like, oftentimes what I've noticed is that anytime GME runs, my channel gets more kind of engagement and all that stuff. So it's like, to me, it's it's gauging the retail sentiment on the stock itself, and it's like natural, not hyped up by the algorithm or anything like that, but more of a natural growth of the channel. So again, like my channel is really small. You guys, come on, if you want a true engagement of what this stock is doing, is Marantz. Marantz is a channel that has gone through a lot of suppression. If you watch him, I've been following the guy for the last 3 years or more. Yeah, 3 years or more before I even start my channel. And what I've noticed is that his stuff doesn't get promoted in another way unless I don't know how I came across his channel, honestly. It was just like a lot of hype back then. And so his channel didn't get promoted to me until, it was well, over the hype. And it was like usually when GME come down, in price. And a lot of, again, manipulation based on, algorithm. I'm sure you've heard of those being thrown around. But that's not really important as to what this company is doing, although, we've been here for so long and we've been jaded by those news and all that stuff. So, okay. Hey, could you give us your price? Oh, Southpaw, I'm sorry. I have no price action here. You come to the wrong channel. Not a TA person, not an expert. So, thank you for your time and goodbye. I'm just kidding. Do you think the option will? Oh my goodness. I don't know. Again, my guess is just as good as yours. Okay. But, I know I have a positive, okay, sentiment on this company. Of course, I'm biased. Okay. I've been investing in this company for a long time, even before Roy and Kitty came in the second time. Okay. So just so you know, this is my perspective. I buy share, and mostly shares and just a sliver of option that I have, just like I said. So, I'm risky in a sense because, like, when I tell people, okay, let me explain. When I tell people, hey, I invest in GME, right? They would say, oh, wow, you're so risky. Right? What else do you have? Well, I only have GME, like mostly GME, right? Of course, right now I have crypto and all that stuff. But at one point in time, my whole portfolio was literally 90% in GME, literally, okay? Because the price, I think the spike kind of bring me to the 90% percentile. But, and of course, people have that mentality that if you invest in this company, it is risky. In my opinion, I'm so early into this company that I don't think anyone could sway me because I, come across the right information about this company. It's not the hype that I get into, right? It's not the run that I'm kind of invest because of, a small chance, yes, it might go to the moon, in one day. Who knows? I mean, look at how it's trade, right? And so again, because due to the volatility nature of this and how many people are actually building their position over the years and they just never sell. I mean, look at the volume profile of this thing. Every time it's being traded, it's really low. And so any type of amount of volume that will come into this company, whether it's through organic engagement, people are just naturally excited about this type of thing, it's going to ensue a lot of attention. Now, mark my word, people are not going to start paying attention to this stock until it reaches $60. I'm telling you because, again, I've seen it. Nobody paid attention to GME when it was $10. It's like, it's so boring. Look, it's down 50% from wherever, right? This is the sentiment that I'm trying to get you, all of you, hopefully, if you're here for the first time, understand this, price action, it's a sentimental thing, right? Or psychological, very psychological. Oftentimes, people do not want to buy when it's boring, when it's down. That's the opposite of what you should be doing. So when people starting to feel like euphoria, right? You want to be fearful. Like people were buying up here, right? Or social media, Andrew Tate, whoever, right? Trying to get you to buy up here, right? Again, and that's where the date comes from, like even for me, I fell for the January 9th too. Did it happen? Of course not, right? But I didn't, bet my whole life saving on January 9th. I'm sure some people did, and they probably lost a lot. So just be cautious, okay? Just be smart about it. If you want to build your position in this company, do it smart. Look at the fundamental. See where the price is right now, $32. Is it cheap? Is it undervalued or overvalued? If you could determine that, then you could start your position. Let's say you want to invest, $10 a day, like Morans do, or religiously every day. I think that's the smartest way to go about it, because if you're busy with your life, that's the the easiest route to do, right? Now, if you're like me, of course, yes, you want to try to beat the market, or, if you want to kind of increase your share or whatever, of course, you're going to have to study the stock, like the structure of how this stock is being traded, right? Technical analysis or whatever, but it doesn't always happen. You don't always get it right. I mean, Roy and Kitty have tons of, hours, talking about that. Technical analysis, yes, it's great to reference, but it doesn't always work. And so you have to be vigilant on those. And again, like, I develop my strategy based on my own personality. So you have your own personality. So you know yourself much more than I know you. Your risk tolerance or whatever, it's on you. So if you ask me about price target, I can't do that. Like, if I know where the price is going to go tomorrow, I'll be a billionaire by now already, right? I wouldn't be here talking to you guys about the whole, speculation and all that stuff. Although it's fun for me to do at the moment. But again, I'm more level-headed in this moment in my life. Obviously, I've had so much, gain, loss, and lost so much more than I've gained sometimes, right, in some years. But I've been fortunate enough, to have come across the right information about this company at large, anyway, in particular, obviously. And so just be careful who you listen to, you guys. Yeah, that's all, right? So Southpaw, I'm sorry. If you want price target, I'm sorry. Go watch, who? Let me see. Who's in this space right now? Or Jackie or whatever. Or Tony De Niro, if you want to watch him. Wait, no, I'm kidding. But anyway, careful. Be careful. If you want advice, okay, that advice, or Tito, I don't know what that is. Okay, not jaded. I'm excited with when the media tries to crush it. Okay, great. Yes, I mean, see, we have so much, sentiment. Jaded probably was the wrong term to use. I'm well prepared, honestly, for anything to happen to this company. The reason why I said jaded is because, all this price action doesn't do much to me. Because I'm not going to sell at this level, unless I have something coming up to, pay bills and stuff. I hate it. But you got to live sometimes, right? What I do for a living doesn't bring me that much money. So, I have to, I'm trying to retire in 30 years, you guys. The economy is terrible, right? And so I want to get to the point where I'm kind of financially stable, to where, I only have to work part-time if I have to in 20 years, hopefully, right? That's my hope. So therefore, that's why I study the stock market, study the economy and everything, just to prepare myself for what is to come. And hopefully, take advantage of some of the cheap stocks, fundamental stocks. And that's why I'm here. I'm here in GME for the long term, because I see value here that, hopefully the masses hasn't seen yet. The misconception is that, we as a cult, we're in the cult when we invest in this company. So again, how many people are actually investing in this company? Not very much, I don't think. And I look at Moran's channel as a gauge of how many people are actually true investors. And so, 10,000 people, that's pretty good. If you say, and DRS, that's another one too. So 100,000, right? Account that was individually DRS. And so with that, let's say, only 10,000 would actually diamond hand these things, right? To the top. So how many shares do they have to own the whole, half of the company, And so let's see. How many shares right now we have? Around this number here. So this is not the true one. It's just an estimate. So we have that much shares. And if we divide 10,000 shares, so each of them would only have to own this much only, like as if this is not. I'm sure there's more people. Well, there's a lot of people who own this much here. Just retail, okay? I'm not talking about like insider or anything. So that's a good amount. So yeah. Do we own the whole thing? Well, we'll see. If it's 100,000, think about this. Okay, so currently you have about 100,000 DRS people, right? And then you divide, let's say, go back. Sorry, you guys. I'm just doing this to give you an idea. See, only 4,500 shares should be owned by retail to own the whole company here. And this is the whole company. It's ridiculous, right? You have institution, right? So you minus institution off of that. So let's say half of that was institution, insiders, all that stuff. There we go. Boom. So 2,000 something. Should I out my position, you guys? Maybe not. I don't know. But yeah, there's many people that I know own more than that. Not personally, but just through this chat alone, I know Jay Curvin, he everybody know who Jay Curvin is, so he owned way more than that. So had his helmet on this morning. Oh, okay. Of course. When Moran says his helmet, it's all good from here, I love that guy. He's so funny and very and most importantly, true to his himself. And I love people like that, that they're not faking it and and don't give a crap about anyone else but his. I don't mean it that way. I mean, like, his value is so consistent. So let me see. It's cool. Let's talk fundamental instead. Okay, cool. What do you want to talk about? Are you a shareholder? Betting on option and all that stuff, or okay, do you know about the falling revenue number? Leadership is closing store. Okay, all right. Great. I did not know that. Oh my God, I'm gonna sell everything tomorrow. Thank you so much, Southpaw, for giving me that thought. I never, kind of know anything about all that. So what should I do with my stock if you? I hold a lot. I hold a lot of GME share. What is your advice? Should I sell because revenue is falling? Because I'm curious on where you're at in this, comment here. Cutting costs and making the company lean while being conservative with their cash pile, which I like. Oh, okay. I didn't read the whole thing. Sorry. Making okay, but do you think sorry. Do you think will be, or what do you think will be their plan to increase revenue? Okay. Their leadership with a partnership with PSA seems to suggest they won't stay too far away from their core business. Okay. Well, I mean, all of my opinion is just speculation. Of course, I don't know leadership, true intention. Okay. In going any industry in particular, right? But my thought always is, so I think the core belief in leadership, okay, my core belief in leadership is that leadership is doing the best that they can to make the company better, and it's been demonstrated to me already. Now, if it's not clear to anyone right now watching, I highly encourage you to read the first letter. Ryan Cohen wrote a letter. It's in public. I'm not going to even pull it up because I want you to look at it. That plan is still in motion, in my opinion. We haven't even achieved, half of the things that we're wanting to achieve, and we've been doing well in terms of cost cutting, right? My thoughts on, what are the plans for them to increase revenue? Well, of course, PSA is one of them, right? Right now, again, we're in a midst of recession, but people are like buying. People are still shopping at GameStop. That's so it's the true testament to leadership of knowing, okay, which is the best industry to go into in the time of recession, right? It's simple, right? And to me, that's the smartest thing, because the cost cutting is the most important factor that they've been doing for 3 years already. And when everyone else tell them not to, or they're not supposed to, and even beaten them down to the point where, retail was, if you've been holding through all these things, right, has, through all of these BS, right, the media, whoever, was, even retail was kind of like bashing on leadership, on dilution and all that stuff. Oh, where's the plan? And I'm like, well, plans, you need some time to kind of, for it to come to fruition, right? You don't just make plan and then just, have the result right away. So people were so impatient at that time. And it's really, again, testament to human psychology, right? You overestimate what you could do in 2 years, but underestimate what they could do in 10 years. So all you have to do is just, give them times. That's it. So the PSA partnership, yes, I think that's the core business that they're going to run with. And in my opinion, if they could do it with PSA and Nat Turner was surprised about it, they could do it with any other leadership, They could go with any industry, Maybe rocket, we might be able to build a rocket one day. You never know, Can't stop, won't stop, GameStop type thing. But I really think that, Ryan Cohen is trying to build a, game, like the most kick-ass video game company, okay, or video game, like gamers, like gamer destination retail, the best one. And so we're not even, achieving 10% of what Ryan Cohen's vision is. And so who am I to speculate and kind of put a cap on his, vision on what he wanted to do with this company? So I'm just here for the ride, you guys, and with the great leadership, I don't think he's gonna, keep us down? Anyway, I feel like I'm not making sense, but I hope it makes sense. Is that, my speculation is just very limited. And so maybe I'm not dreaming big enough and all that stuff. So I didn't even know that he was gonna, or no one knows, right? That he was gonna go the PSA route after the NFT, right? And here's another things that I want to point out too. The NFT marketplace, it's gonna come back, I think, in my opinion, because what is happening with crypto right now. The next president, we're about to inaugurate the new one that is very pro crypto. And so you think GME's not going to take advantage of that industry growth from this time, like this 4 years of this presidency? Yes, bet you anything we're going to bring it back and then, have people own some of those assets. And since we have PSA right now, you could mint those on the blockchain. It's going to be wild. Wild, I'm telling you. But anyway, I'm not trying to hype anyone. Why do you think I'm trying to build position in this company for so long? I know crypto has been used to suppress the GMA stock, okay? Because again, I don't know what the shenanigans that they're using to depress the stock price this much. But again, to me, that's just speculation. I have no proof at all. Only time will tell. I'm sure, if there's some shenanigans happen, it will come up to the surface and all of us would find out, right? But meanwhile, I'm just focusing on fundamental. And to me, this is a good price to get into still. We'll see next week where it's going to trade at. And then, simple. I mean, you don't have to complicate things at all. This is pretty simple, you guys. Like, even TA too, it's going to give you the impression that, oh, look, this is a resistance, so I better sell here, It's like, let's see. Let me try to do some TA here. Okay, let me just try to sell here. And then because this is going to be a resistance, I'm going to sell, right? And then it's going to bounce over here and then it's going to go up here, right? What if it doesn't? What if it does this thing? oh. Like that, right? Again, anything could happen, you guys. Like, the world is burning. I mean, look at California, it's burning right now. So S&P 500 could just drop at a dime, because people are fearful. And so prepare for all of those. Now, if you have calls and all that stuff thinking that it's going to go up, market maker has an upper hand here because they see your order already. So you are only betting against an entity that have the ability to price those options, right? The reason why it's so expensive right now or during this time period is because they want to make money. People want to bet it up, right? Including me. Like, so, because they are expecting something, right? When you're expecting too much, in call to put ratio, right? That would give you an idea. Let me put this one up too. And then call to put ratio. Sorry, you guys, I'll read the chat in a minute. Is this the one? Something like that. Anyway, sorry, I'm not a TA person. Don't waste your time. I'm sorry if you click on this show and you're like wasting your time. Anyway, what am I doing here? Listen, let me see. This one. Put to call ratio. Boom, there you go. What is going on? Okay, I have too many indicator, I think. Okay, this one. I wonder if it shows here. Okay. This is a disaster, you guys. Disaster. So it's been so low. The range is like kind of like, they do this thing so that they I'm talking about market maker here. Sometimes they do lose control, yes, and I think that's where Rowan Kitty comes in and able to read all of this again. Like I'm just showing you there's so many indicator out there. Like I'm not even well versed on this at all. But all these squiggly lines here, right? It just shows some volume in the call and puts ratio. And so typically that's why you have this max pain here on the option chain to make a reference, right? Just because the max pain over here is 23, right? Doesn't mean that it's going to come down to 23 all the time, but most of the time it does. It's a max pain because market maker love to trade the stock around max pain. Again, this is the maximum pain to retail. Okay, so the high proper if stock ends the week at this price, market maker makes the most money. Okay, so that's what it means. And so they have the incentive and can have the power to do this. Can. I'm not saying they won't lose control. Sometimes they do. But most of the time they don't. And so you have to be careful. That's all, right? I mean, you've heard people lose their life savings because they bought calls and thinking that it's gonna make them gazillions of dollars, like Rowan Kitty. So don't be mistaking that. That's all. Okay, Southpaw. I don't know. You guys, I don't know if he's a short seller. If he does, okay, well, you're lost. Okay, you are, mistaking this company future. But if you're here just for the swing trade, okay, welcome. You are the one who gonna bring the price even higher. Add the fuel to the fire. That's okay. Welcome to the stock. Yes. Welcome to the casino. There you go. If you want to make money, lose money, you welcome all of it. But I think long-term shareholders going to benefit immensely from interaction like this, where people are shorting, people are longing, people become so hyped that they miss, what is it called? Misinterpret the price action for the fundamental of the company, right? So, and again, this is why we have a price like this, where investor was salivating around here. And how do I know? I mean, look at this indicator, you guys. I'm not joking you. I've been kind of using this indicator. I've been showing you guys a couple live streams already. Look at this. I mean, it's uncanny, right? Every time. And this is bankers' fund trajectory. If this stock, it's not valuable, why are they buying at every dip? Smart money, right? So you might want to follow them a little bit here. And I don't think they care about how high GME go, how low GME go, as long as they are able to buy and sell, when it, see? Again, they're not mad that GME come down to 10, right? Unless when they have a short position against it, yeah, of course they're going to try to sway you to sell at this level here. I mean, how many documentary that you saw so far, telling us this is not a buy, right? Crazy, huh? With business, you shouldn't limit yourself to one revenue stream. You should have multiple legs to your business, okay? You can still stand if one falls. Yes. That is true. But if you find a niche that, bring you the most revenue, of course, we're gonna focus on that. And currently, right now, I think Ryan Cohen found the niche in Pokemon trading cards and collectibles. Pretty smart currently to lean on that just for now, and also the cash pal as well. I don't think he's gonna do much with the cash file until we crash, like the market crash, right? And so if the market crash and the stock went back down to $10, we could technically buy our stock back at this, because again, stock is undervalued. Why not? But again, panic, right? People panic and they would sell everything to pay for whatever lifestyle that they have to, pay their debt, or car payment, some natural disaster like the fire that we just saw in California here. So my heart goes to those family who lose their home, and I know they're well to do, but nobody wants to see that. 13 people watching. Oh, cool. Oh, wow. Okay, now I'm nervous. Usually I only got 2 or 3 people, you guys. Why are you guys here? How many people? Okay, in the chat, please. Okay. How many people are robots? Just kidding. Oh, man. Thank you so much. Appreciate that. Okay, so yeah, I don't have anything. So see, now I'm blank, you guys. Okay, just kidding. Okay, so let's look at I know I'm bringing XRP because I'm an investor in XRP for quite a bit. It seems like there's a run here. It's okay, quickly, I'm expecting this move right here because the recent move. My thought is that I've been scaling back into crypto, you guys, and I'm kind of waiting for the, XRP to do its thing, completing this, whatever, this move. Now, XRP moved pretty quickly, so I'm hoping that it's end this weekend. I could grab the liquidity from here real quick and then go back to GME. Yeah, that's the name of the game. And then, this is Bitcoin. Who cares? Let's see. Okay, bonds. So the bonds market is going wild for quite a bit of time. A couple of days right now, where you see the 10-year. The 10-year has been kind of rocking. TLT. I've been watching that as well. So why is this important? Well, the thing is, we are investing in a company that has a lot of cash. So cash usually is, they always say, oh, cash doesn't mean anything, right? And so I'm thinking like, well, I have a brain to think about cash. I would love to have a lot of cash in my life. So why are people telling me that because this company hold up a boatload of cash, they're only worth what? $10. Why are they telling me that? And to me, logic dictates that currently you would want to stay liquid, right? Because everything else is expensive. So why not stay in cash? I mean, to me, it makes sense for them to stay in cash. And whoever tells me not to stay in cash, I feel like they have bad intention. No? I mean, just my own opinion here, you guys. So don't be. Hey, says, what's up? Thank you. 51 chair gang. I'm sorry. I'm trying to be cool, you guys. Not cool at all. Not a robot. Okay, good. Thank you. Appreciate you. Good. I don't think your algorithms send robots here, you guys, unless they want to, give people the impression that other stocks like Unity, I bet you anyone who talks about Unity will get a boatload of bots sending to them. Just, again, show engagement, right? But it's all fake. So again, this is why I know that unity has been pushed. And again, unity has been pushed by who? Media. I mean, look at this bullcrap, Look at this. Unity jump as roaring kitty memes. Like, see that? Like, they want to entice you to buy into those, right? And they do this time and time again. People will fall for this time and time again. It's human nature, you guys. When you see all the green bars, you want to chase it. And that's the opposite of what you should be doing. I mean, listen to this. I didn't even listen to this. Sorry.
Welcome back to Trading 360. I'm Diane King Hall. Time now for the big three stocks, three charts, three trades. Rick Ducat will take us through the charts. And here to take us through the trades is Alan Nuckman, bullseyeoption.com. Great to talk to both of you. All right, Alan, let's start out big picture today. What stands out from the market as we kick off this week? It's the last full trading week of the year because we've got 2 holiday shortened trading weeks in front of us after this.
Well, what we're seeing is some stocks that had been long forgotten. Now people are trying to find some value in them. And, we've had our leaders. The tech sector obviously made a big comeback. S&P didn't make new highs last week, so it had a bit of a pause. But we still have a lot more upside. 6,300 is that first target from that drop that we saw in August on that old top. But let's also remember that the VIX is 40% lower. The all-time low in the VIX is 40% lower. So there's a lot more upside in the S&P. If you project 40% higher from where we are now, 8,500 is the S&P target if this momentum continues and this trend does not end.
Okay, thank you.
Alongside.
Let me go to, it's going to be a lot. Let's see, what are they trying to push right now? Unity. Okay, let's go. Sorry, am I too loud, you guys, or am I too low? I feel like I've blown some people's eardrums off.
About $2 higher, but with a main option, it has 5 months of time, a lot of time for development here. But again, the key for me is that money flow, as you're seeing that accumulation on the long side in the options market. So it's not just unusual option activity. This is a measurement of the actual accumulation, because with unusual options activity, you don't know whether it's a buy or sell. It's at the bid or the ask. But my indicator is able to kind of give a code break and see that positioning being built. And that's something I want to piggyback on it. And I just want to follow the money.
Yeah, see, they're pumping Unity, you guys. And who are they? It's institution, I bet. Or whoever, bad people. No, just kidding. I don't know. I'm just speculating. Okay. But Unity comes, of course, like, again, because Roaring Kitty tweet that meme, right? And they run with it. And this is the telltale sign to me that, it's not Unity. It's just, it's too much. Why are they pushing that? Why are they saying that this is what Roaring Kitty is talking about? And look at this. Like, really? They lose close to $1 billion. Crazy. And retail's gonna promo in, and they're gonna lose everything too. So yes, some people will make money. I'm not saying you can't make money, but if you don't jump off the ship quick enough, you won't be able to. And they will use that sentiment after all of these, spike or whatever, price spike, however high they want to send this to. They're going to make that sentiment, oh, see, look, GME investors following Roaring Kitty is going to suffer the same fate. How? And meantime, GME just trucking along, doing its thing, fundamentally, closing stores slowly, methodically, trying to bring up the revenue stream as quickly as possible in this environment, in the recession that we're in right now. I know the news doesn't tell you we're in a recession, but it's okay. They'll wait until we're well in the deep depression. Then they'll let us know, oh, shit. People can't feed themselves. Then they'll tell you. It's like, okay. So again, they're always late in the game in telling you. Right now, they're saying it's booming. Everything's the stock goes up to the right. I'm talking about the SPY here, you guys. Okay, so that's the common narrative that they're trying to push. But of course, the bond market is telling a different story, you guys. So currently, the market is telling you that inflation is coming back, and so that's why all the big guys are not buying the Fed saying that the CPI is low. So currently it's like 3% or something like that, and it's going to respike because the Fed should have raised the rate higher, even higher than 5%. But they want to extend and pretend, and who are they protecting? You know who. If you listen to Moran's Connect the Dot and all that stuff, you understand why the market is being pumped right now. And better believe it, it's about GameStop. Yeah, it's just my opinion, right? Speculation, I have no proof, but again, I have to, kind of come at it at a different angle. So that's why I cover bonds, because again, with the cash pile that we have, leadership's going to take advantage of these. And eventually 30 years. I mean, think about it. If we could have a 30 years 5% rate on the cash that we could accumulate in this environment, it doesn't mean that you have to lock it in for 30 years, you guys. Don't make that, fallacy. You could sell this bond in a year for a higher price. Okay? Understand that, right? Because when people are flying for safety, eventually this bond, you won't be able to get it at what is this price right here? $93, okay? Right now, it costs you $93 to get this. So that 93 is going to be 100, 200. Who knows, right? Again, you've seen the TLT or something right here. So again, don't make that mistake of saying, oh, they're locking in for 5 years, a 5% rate. That's all they got for that. Such a terrible company. Doesn't do anything. It's like, really? Are you 5? Okay, sorry, that was me. Make the impression. Sorry, I don't want to offend anyone, okay? But anyway, so, I mean, look at this, right? So currently you could get $80, very cheap. And long and behold, you see this, right? Look at this buy. They've been accumulating. Who are they? Big bangs, They see what is coming. I'm sure it's going to be within, what is it called? 3 months, that we're going to see some volatility. The VIX is up, like the guy was saying. And so people are starting to realize, hey, we can't survive anymore. So what happened? People would cash out of their 401k for emergency, for whatever that their life dealt at them. And we have the retirement age coming in, right? And so they're going to eventually have to cash out. So, yeah, I mean, economically, we're not doing well. So history will repeat itself, right? When Trump comes in the first time, he was saying that rate was too high. And so he was kind of like pressuring Jerome Powell to keep the rate low. And I think that's why we've experienced that inflation since then. But again, it benefits the commodity, and everything's going to go more expensive, okay? And so, okay, let me read the chat real quick. Be more. You should work for GameStop PR. I know, right? That would be an amazing job to have. But I would be the most terrible communicator of all time. I truly feel like that. So I need more training though. So give me maybe 2 more years. Maybe 2 more years. I think I might be able to, come up to that level. I know. yes, public relation. I saw that Moran's video. Obviously, it's actually a pretty good playbook. Because PR usually will kind of keep those sentiment at bay. But I also already saw an article about how they're spinning, how Jimmy is not. Oh, look, they can't cash out on the meme craze anymore, so they need PR to do damage control and all that stuff. It's BS, right? And I think PR is going to showcase the strength of our balance sheets to the public, and it's the smartest move, because we are actually trying to do something right now. We're actually a legitimate company that will bring a lot of money as retail. I mean, compared to retail, right? I'm not saying we're building rockets yet, but, oh, this is Unity. What the hell? Why am I going to Unity? Who cares about Unity, right? And hopefully, again, if this PR person is really good at their job, they are going to, go to these social media outlets and all that stuff. I've seen, hold on, you guys. That's WeWork. I was going to cover that. Of course, I'm just not doing much. Hold on. I'm looking at something right here. I was watching like Bill Gates, XRP. Wait, you guys. See, look, I'm outing myself. Let's see. I was watching Mark Zuckerberg. Oh, this guy. Yeah. So, videos like this been popping up pretty, like, it's refreshing to see, right? People like, promoting GameStop, going to the store, and I think this gentleman also did a PSA showcase too, something like that. And so it's coming. I mean, I feel like GameStop is now getting ready to spend on advertising again, because they are ready for growth. Yes, that growth story is going to come to the company for sure, And I'm sure he's part of the public relation campaign on this company. And, they don't even need it, which is people investing in this company who are truly also promoting from within already. But yeah, so it's pretty cool to see this video popping up, and the Pokemon, Pokemon PSA GameStop too. I'm sure you see a lot more of that, like these type of video as well. And again, these are genuine, reaction on what PSA and GameStop partnership has been kind of taking off, and then people doing the unpacking things, right? Like, see, like people are shopping in droves, you guys. And again, this is why I'm so bullish on this company leadership, Doesn't matter what they sell, they're gonna do it to the best of their ability to do so. And you don't want to ignore, okay, people like this. I'm talking about leadership in GameStop. Because if you do, 10 years from now, you're going to regret not paying attention. Just like Elon Musk, right? People bet on Elon Musk's success before he was successful. And what are they now? Where are they now? They are millionaires, right? Because they are, believing in something that is bigger than themselves. You don't always get it right, but if you get one right like this, and I truly believe that, GameStop is one of the company that you will always, oh, 13 people. Cool. Sorry, I got distracted. you were always oh my God, being talked about, in the media and everywhere. Let's see, internet is too high. Okay, internet too high. Not sure what that means. Don't push your faith on man, even a roaring kitty. Yes, I know, I get that, But some leadership you want to elevate. I feel like, you need people like that. But to me, Ron Kitty is a different type of, to me, he's a successful day trader and also investor as well, But, day trader, sorry. Swing trader of some sort. Because he explained in his videos sometimes like he doesn't hold one stock more than 3 to 5 years or something like that. But if he see an opportunity, he will track those stock to wait for the right opportunity to add at the opportune time. And so, one would posture, yes, perhaps he sold, but he sold at the right time and then come back in at the right time too. So again, the name of the game is because he's so bullish on this company, Gamestop, he's going to always add to his position. So that's what we're all waiting for. Maybe he's not quite to his, target yet. Maybe there's a certain amount of shares that he wants to accumulate, and it's just not ready. Maybe he overestimate himself to be able to, get more shares in this period. Perhaps he didn't even realize that the market was closing in January 9th. I know people painted him out to be coincidentally that we have January 9th was, a market pause, but again, it wasn't foreseen. Nobody, could foresee that happen. So perhaps that's going to put him on delay to show us his YOLO update again. Again, I'm not investing based on that at all, based on memes. And so it's always fun to talk about, right? Because that's what people want to hear about. But otherwise, be so boring. It's okay. More waste time talking about that, thinking about that. But anyway, so I was watching this clip here, and it got me to think about something, you guys. And I don't want to play the whole thing, but this is Mark Faber, the one that Moran's was interviewing a couple of days ago. And I just happened to see this one, and he already think that we are in recession. And this one particular statement by Mark Faber got me think about something about the media. Okay, so I'll explain in a minute here. Think about the animation comment. Okay. Okay. So let's listen in.
CNBC used to criticize me very.
Okay, sorry. Let's go back a little bit further. Let me just do the whole thing.
The US, for most people, is already in recession. That I tell you. Most families struggle. Our debt level as a percent of the economy has gone into explosive growth mode. The problem becomes affordability for the majority of people. The majority of people have salaries that go up, but they do not go up at the same rate as the cost of living increases. We have a housing crisis in the US housing market because affordability issues. Most people can't afford to buy a house anymore. And that's why I'm so critical about the Federal Reserve's monetary policy, because what they've created is an affordability crisis. They can print the money, but it hurts ordinary people more than it helps them. The whole economy, the whole system is geared towards prices going up and driven by asset inflation. If they don't go up anymore, you have a recession. And that the Fed is essentially afraid of. So they will pursue policies that are inflationary rather than policies that are sound. So you have a group of 1% that benefit and 80% do not benefit. They live paycheck to paycheck. The Fed causes more problems than if you had no Fed. The best would be to essentially dissolve the Fed.
Mark Faber, I am absolutely honored to interview you again. Welcome back to our show.
Well, it's my pleasure, and it's an honor for me. Thank you.
You know, it's not too often that I get to have an opportunity to interview someone that has literally been all around the world. I mean, I think you've lived in so many countries, and you've been serving the global financial markets for, don't take offense to this, but sir, for more than a half of a century. You've seen a lot through the years, sir. So
yes, I've seen a lot. And I participated because I still work. So I've been in the middle of the action, actually, for a long time.
Well, I know you lived in the United States, but you travel all around. Maybe we could talk a little bit about that. And I know in our previous podcast we had as well. But your financial predictions and your work in global finance have probably saved countless people who have listened to some of your predictions. You've prevented them from losing their wealth. And for others, there are probably equally as many that said that they probably wish they had taken your advice.
I know also people who say, don't listen to me because I'm always wrong. So, whatever you hear from people, some people like you and they look at you in a more favorable light. And some people like you less and they look at you unfavorably. CNBC used to criticize me very heavily for my views because they were not always as optimistic as the CNBC commentators or editors' views. But this is life. I mean, you're not going through life to get affirmation and to be a popular figure. You should go through life as an authentic person and true to your moral background. And I'm a Christian, so I have a slightly different moral background than, say, other people have.
See, that right there, just again, and CNBC is notorious, right? In my opinion, right? Just based on my opinion, okay? Don't sue me or anything. No. Observation. CNBC is always those type of media that has, a track record of always bashing GameStop for whatever reason that they could. They would bring people in, what is it? What's this guy, right? They would bring, seemingly very highly educated, people, and they would have like a kind of glimpse outlook on what GME could bring, right? But again, these are to manipulate you. This is 3 years ago when GME was like, kind of hot in the price action and hot in the press, and people were kind of like frantically, telling people, oh, buy now and all that stuff, and the whole height of things, and you understand the story. But what I'm trying to highlight here is that CNBC medias in general, they will sway you to do something with your investment. And if you have people like this, who are genuinely, because of his skill, his experience in the market, trying to warn people, it's like, okay, yes, asset bubble is real. Yes, just because your price going higher doesn't mean that your company is any, more or less impressive at that particular time. It's just due to the Federal Reserve printing money like crazy. And where does that money going to go? It's going to, pouring towards instruments that will give you a better return. And since people have the ability to bet up and down in any particular stock, because of how the markets, right? When liquidity, come back to the market again for whatever reason, or taken out of the market because, people just can't buy anything anymore, so they have to go to their portfolio. But again, the point I'm trying to highlight here is that, the price action that you see is not indicative of the actual value of the stock, in that particular time. Eventually, the stock's going to trade at a fair value or a little bit more than a fair value. Okay. So, just keep that in mind. If you see GME next week going $1,000, just know that that's the market mechanism. And of course, there's so many other stuff that layered on top of this. as well. That I can't explain it. It goes up and goes down. You can't explain that, right? I mean, I heard Rowan Kitty said that too. But the name of the game is to always pick an asset, a company that will do right by you. And none of these liquidity, crunch or, dry or dry liquidity. Was it? Oh my God, there's a term. Liquidity crunch. Let's just go with that. It is going to do much for the actual fundamental of the company per se. Okay. I hope I explained that well. It's just that to me, this is a good opportunity to kind of like take an inventory of your portfolio, to at least allocate to like asset that you believe in the long term and will thrive during this inflationary reinflation, because the Fed just keep the rate so low, because again they accustom us to think that this rate is too high. Okay, I mean, too high for who? You have to understand, like the people that need the most money, they don't get it because they can't borrow even at this high. But the rate needs to be a lot higher, just as demonstrated by the bond market. That's why, again, the true market of things, of the bonds, will tell you the true sentiment about what the market is telling you. Yes, the government could kind of temporarily, meaning the Fed could kind of temporarily give you the impression that the rate should be lower. But if the market doesn't agree with you, it's going to keep going higher because of the mechanic, right? And so that's why having cash right now is more advantageous. And having safe asset like this kind of weed out the fear that will ensue later on. Again, bubble, you don't know how high it's going to go, the inflation, because how long have we been in an inflationary, environment? It's been, decades. And so this is decades and decades in the making here. That's why I was saying the name of the game. Why do we need 2% inflation every year? Have anyone noticed that at all? Why? Because the top people have to inflate their price stability. You've heard Jerome Powell said a lot of time about how important it is to keep price elevated or stable. What he means by that, he wants their asset, prices to stay stable and always ticked up 2% a year. Well, regular people can't do that, right? Because again, we don't have the money printing ability. And so eventually the economy is going to have to catch up to that. So with the amount of trillions of dollars, we can't grow ourselves to $10 trillion in the next 10 years, even in the next 20 years. It's too much money. And so, and again, this is why Bitcoin and all of those assets is being inflated because of that function. And think about this. This is not just the US problem. It's global. China's been printing like crazy now too. Japanese yen, crashing because they've been printing their currency to try to keep up with the US inflation, 2% or whatever. And even then, they can't even do it. So now you have a negative rate. So eventually, that's the buying power that you're eroding. So since Bitcoin has a max supply, that's again the asset that, again, I know people have different opinion on Bitcoin and all that stuff, how it's already been concentrated, but the point is that you could own a piece of this too. Had I buy it and then just forget about it, I would have been fine already. Hedging inflation, and even, due to the ebbs and flow of the market, you get to take advantage of the spike, and then because you're following it for quite some time. But again, this dynamic's going to keep going. I'm not trying to scare people here. Again, I encourage people to watch this video. Very highly informative. So just prepare yourself, prepare for anything. Who knows what's going to happen in the future? But if he's wrong about the inflationary and all that stuff, it's worth listening to. Advice, good advice in general. You might not make $1 billion in one day, but at least your wealth is going to at least preserve its buying power. That's my goal, is to increase in my holdings of good companies that I believe in. GME is just one of them. I'm sure there's more other stocks that people know about. Then you make video on those for you. For me, of course, GME is always my, my long-term home, and we'll continue to follow, the price. Again, a lot of people would say I would buy at every level. To me, again, for me, I don't earn that much in my regular job, so I have to be careful. It matters when you buy in, so the name of the game is to keep your cost average low. And the name of the game is to accumulate the amount of shares before it goes to the moon, right? Whenever that is, I don't know. I can't predict that. Because I can. Cool. I saw that one while I was watching. That's good. Okay. The living memory of 2020. Okay, bubble. No longer here anymore. I get the feeling that people are repeating the same mistake. Yeah, of course. I mean, again, history repeats because the next generation usually are not aware of what's happening back in the Depression day. And so they become complacent, they become more and more, because we experience the growth that, like from, the Great Depression, it's been nothing but going up and up to the right? And so younger generation, I'm not saying that I'm that old either, but even my generation too, whoever is not well versed in the market, they don't have a clue. And I try to kind of educate them as much as I can. Well, educate, like just make them be aware of, like, hey, save as much as you can. Right now is not a good time to go out and spend, even my family member too. I warn them and they don't listen sometimes. Like, I was like, gosh, I spend so much time talking to them and they're not even listening. But, at least I'm so glad that my sister at least listened to me and able to at least give her some, GME shares here in her portfolio. So that's good. But I'm always like, be vigilant about, what might happen because of the time that we're living in right now. Again, people are falling asleep at the wheel. Even the leadership don't know half of the time too, like politicians, and they just, again, zombies. They're not there to protect anyone, just like Governor Newsom. I mean, political. Okay, let's steer back from that. Economy wise, people are gonna falling in the world of hurts, I feel, because they're forgetting about all what happened. But I hope, when it happens, we could come back pretty quickly, just as quick. And, because we have GME shares, I'm hoping to help people too. Unfortunately, we can't help them all, right? We could only help a handful of people who truly understand what is about to happen, Not doom and gloom, I don't think. I'm sure it's going to bounce right back because money's going to keep, kind of rolling. Because again, Trump loved low rates environment because that's most of his wealth too. And so we're going to be inflated the whole way. That's good for GameStop as well. Businesses who's trying to do right by this economy. If you're positioning yourself correctly, you will be inflated. Your asset will be inflated to the height that you probably wouldn't realize. And again, this is why I'm saying $1,000 a share is not at all a lot in this particular environment. Again, just due to inflation alone, right? You think about it. What is $30? What can you buy $30 right now? And in 10 years, what can you buy for $30? I'm sure you're going to buy half of a meal in 30 years? Right? So to have GameStop right now at $30, to me, it's like half of a meal per share. But then 30 years from now, if we're inflated to the max, imagine how much would that be? That shares is going to be so peanut. It costs you peanuts now. Yes, it's probably cost you 2 meals right now if you want to measure it up that way. So 10 years from now, it's going to cost you 2 meals to get 1 share of GameStop. Again, reference, right? Just based on inflation alone, this company is so undervalued. And that's not to mention what, the cash pile is going to bring them and the business is going to bring them. So yeah, it's so much. But this segment here, of course, I'm not going to play because I think they're going to copyright me or whatever. But he's just, this is a warning to unsophisticated investor out there, not to be in GameStop. It's going to come back down. People are going to lose money and all that stuff, right? I mean, sound advice, sure. But they are missed. They missed the whole, the whole... the whole fundamental story turnaround, like the real fundamental story, because they are believing in people like this, the news media, who try to steer you away from a good sound company. And again, that's why I concerted effort to put Unity in that bucket, right? They always do this, and I want you to take notes. The next time they pump any other stock that is new to you, that is meme stock, black basket or whatever, take a note at the financial of those companies. I would bet you anything they would lose hundreds of millions of dollars. And then there's oh, yeah, it's just the same as GameStop. I don't know how long they're going to be able to do that until people are people like me and people like Morans and new people who are coming across this stream for the first time, and they're like, yeah, I mean, she had a point, right? And I'm sure more and more people are going to come to realization that this company is doing well. We are so early in this company, you have no idea how early you are. Even for me, I don't even know how early I am. I've been here for 3 years. I'm like, oh, I'm ready for the whole things to happen. Very exciting, to think about the future of this company and how many people will FOMO in because they were like, oh, this company used to be, losing money. Now they make money. So there you go. And again, don't be mistaken that they're not accumulating like crazy, okay? As you can see here. I'm sure they load the boat down here. You guys see? Buy even here too. If you go to a lower time frame, you even see more. and people are buying over here at this price level. So yeah, think about that. It's crazy, right? It's crazy to think about. But see, look, they used to push this one to YouTube, WeWork. I make a video about that, like my older video. I'm sure it doesn't get any view, but at the time they were like, oh, this is a long-term play, right? 3 years ago, and what happened? It went bankrupt, right? So why are they pushing those? And this is the SPAC time. Remember when Morantz was saying about how 2021 was the SPAC time? Like tons of SPACs was pushed to retail. SoFi was in there. A basket of company that was, brought into the market through SPACs. Tons, right? And most retail, most of them lose money on all of those company that was pushed to retail to do what? What are they doing? Well, distract you from Jimmy. Right? Jimmy was there the whole time, was suppressed and, in a sense, was kind of derail from that, retail sentiment. But, the true investor out there that knew that particular trick, was accumulating like crazy down here. And so, it becomes an opportunity for me, for people like Morantz and, people listening to this stream. I bet you anything most of us are Morantz audience here. So with that suppression, it comes the second opportunity here. And so I love to buy stocks like this where people are not paying attention, that has the maximum amount of value added to that. Because again, like back here, when you buy GameStop, it was riskier, a lot higher risk. And the reward is immense, right? If you sell at the right time, okay? Assuming, right? Over here, it's a bit less risky because the balance sheet becomes a little bit better, right? But if you were to compare the equity, level from down here to here to here, equity level, it's different, right? Due to the market, the capital raised that we've been doing for a while. And so this particular price point, the equity for this company, if you were to buy it at $10 back then, was around 50% equity. If you were to buy at $20 right here, because of the dilution, 50% equity. So the opportunity to buy it here versus here are the same, but yet the price keep getting higher. Guess what? People who still hold this level will get their share if they were to hold to this particular price point. This 50 equity stake increased to 100%. Why? Because they didn't sell at this point. So what do you think is going to happen around here? People who bought at 20 could possibly see their 50% equity increase to whatever, 100, right? Again, the shareholder equity will determine that. Okay? Shareholder equity will give you that increase. And when you have leadership who's trying to increase your shareholder equity, you want that leadership. But for some reason, they want you to buy this type of company where heavily in debt, at the time was like $20 billion in debt or something like that. I remember Jim Cramer was pushing that as well. And so anytime, they are trying to do that, it's always to undermine retail investor time and time again. And so that's why they don't promote people like Mark Faber, who just trying to do right by people, right? Using his skill, his knowledge of the market to warn people, but then they don't promote people like that. So yeah, be careful. Again, just because they have more subscriber than anyone doesn't mean that they are influential in any way or that they're worth listening to. I'm not even put that on myself too. It's like, I could get this wrong, I could be wrong about GME future, who knows about the future. But so long as Ryan Cohen is in it, seemingly he's such a good guy. I feel like, I could be friends with him. Very down to earth, even though, he's been successful beyond any person of his age to be able to achieve, right? I think it's worth something because, he has a lot to prove to the world, and yet still people, don't give him enough credit for that. And even Rowan Kitty too. The fact that he's able to amass that much wealth already just trading one stock, and understanding the volatility and all that stuff. I know the news media would love you to think that he scammed, unsophisticated investor to do his bidding to increase his, holding. That's not true. That's how the markets work, right? And that's why I always said, if he was the trader for banks, he would have been praised, okay? Parading around, look, the most successful traders of all time. But because he's making money for himself and helping retail to do that, he's a villain. You see what I mean? So, understand the psychological twists that they want you to to think about certain people that might have some knowledge that you don't, and just learn from them. I'm not worshiping Rowan Kitty. I'm not worshiping Ryan Cohen by any means, right? Of course, if Ryan Cohen were to come out tomorrow and spend all of that $4 billion on a yacht, for whatever reason, for himself, yes, I would be like, dude, I'm not going to be here. Why are you buying yachts and why are you buying private jets? To do what, and does it bring any money for a shareholder for that? So you have to, reserve your rights to change your mind, But anyway, we go to Because I Can. The 2% comes from another country, but U.S. mistake for 2% for every content. Okay, continual years. Okay, I didn't know the 2% comes from another country. That's their mandate, right? They try to keep the inflation low. Anytime the inflation coming down from 1%, they tend to turn up the money printing again. And so, I don't know, again, it's probably government as well, because they want the Treasury versus, the Federal Reserve, and how, these two entities are the, corporate. Of course, government spending has been quoted to be, in deficit for a long time, because they don't make enough money in tax revenue to do whatever they need to do. So government just becoming too big right now. I like the face that everyday people on YouTube talked about the Federal Reserve. Okay, very different from the late 21 and earlier. Oh, okay, cool. Oh, the fact that, okay, you mean the fact that at this time only Ron Paul was only the person publicly, right? Yes, I know, right? Back then he was touted as the crazy person in the mainstream media, but of course, again, they have the far reach to influence so much more people to do the wrong thing. And again, this is how they keep themselves richer. Who are they? A group of people who have massive amount of, influence based on their network, whether the company that they own, Yahoo Finance and all that stuff, a conglomerates of, company, real estate, every single sector that they could put their hands on, they would want you to buy at the wrong time, and then sell at the wrong time. Because when you're supposed to be selling, they tell you to buy. When you're supposed to buy, they tell you to sell. Just like GameStop, right? How many times have you heard? Oh, you sell now, or you're not going to ever get your money back. Oh, you sell now, it's $17. So you're telling me that retail investors should sell at 17, right? And when did they say that? I'm sure if you go back to my regular, older video, you would see where I pointed out. It's like, hey, they're telling you to sell. And of course, you've had to wait so long, if you're here and your share dropped down to 10, right? How would you feel? You're going to feel so frustrated. And if you own call option back then, you would have lost everything. 40%. Of course. Meanwhile, what happened? What happened to the balance sheets? Look at this. Beat. Even this is beat. Flat or whatever. But even for this particular one where they're saying, oh, GameStop is missing, look at the expectation. It's crazy. And people still, You know what? Let me do something. I'm going to go eat, but I wanted to kind of reminded me because I think back then I don't have a lot of audience, so since I have more, I want to remind people real quick because it's worth looking back. And since I'm gonna have to go grab something to eat real quick, I think around here. No, not that one. Let's see what my psychology. Well, actually, hold on. Let's go back in time a little bit here. Oh, right here. Yeah. Because I think my microphone is terrible back then. Okay, Ryan Cohen interview. That's pretty cool. What? Did I not show? Maybe it's 2004. My microphone terrible. Sorry about that, but I feel like I have to, you guys. You know what? Let me just go here. Okay, I'll be right back. I'm gonna play I hate to say it actually is a propaganda. If you say the economy is doing well, but for some reason you're still struggling, if you're struggling, it's your fault because you're, dumb and you don't know how to make money for yourself or something like that. Like, oh, people are making money. The only people who make money are the people who have asset, right? Or the crypto, stock market, or whatever. But those people are not working to get that, right? And so, and this is why Brian Cohen, speak about it. So that's a good segue to get to. Now, I know you guys remember this interview here, but it's worth revisiting because he's speaking about GameStop, how difficult it is and what is the challenge on GameStop, right? And this is 1 year ago when he did it. He was still a chairman at the time. He wasn't a CEO yet. I'm not going to play the whole thing, but this snippet is worth listening to. So let's go.
Can you talk about what building Chewy meant to you and what you learned from that experience?
Can you hear the dog in the background?
Yeah, it's perfect. It's a real dog, by the way. It's not just sound effects.
Yeah.
What did I learn from Chewy? Chewy was hard. We built Chewy in Florida. It was very hard to raise capital. We were a bunch of nobodies. It's like 3 states basically account for like 75% of venture capital: New York, California, and Massachusetts. So raising capital was really difficult at Chewy. Attracting talent was very difficult at Chewy. Especially being in Florida, the talent pool was pretty limited. And we were selling 30-pound bags of pet food online. And so that wasn't very popular either against the backdrop of pets.com. So first, everyone said pets, you can't make the unit economics work selling 30-pound bags of pet food. And then once we had positive unit economics, everyone said that Amazon was going to crush us. And neither of those things were true. But it was very, very tough. It's a low margin business. Part of the secret sauce was just how we structured it. We had negative working capital. We took the business from like 200 million to 3.5 billion. We burned through less than 150 million of cash, even though we accumulated significant losses. We turned our inventory over faster than our payment terms. But granted, going head to head against Amazon, selling 30-pound bags of pet food in the mail, tough business.
Yeah.
GameStop, on the other hand,
So let's address that real quick. So he was telling you how it was a struggle, right? But he succeeded against all odds. Okay, against all odds. Because those goalposts that they're moving, oh, you would never do that. Oh, you never do that. Oh, you never do that. But throughout every stage, he's been able to do it. Like, none of those criticism is true about Chewy at the time. And now we know what Chewy is because of him, because of this guy, right? How is that luck? Like, these people are saying, how is that a failure? This guy is a failure? Are you telling me? It's like, come on. Yahoo Finance? What the hell? Anyway, let's go back. But anyway, so he was saying that the secret sauce for Chewy was operating in a negative working capital, right? And then was able to expand it, turning inventory faster than the payment. That was good, right? So what makes you think that GME is not going to do the same thing, or will be able to kind of turn inventory faster than the payment? He's trying to do that right now. So inventory right now, if you look at the metric right there, let's look at it real quick. I know, like, terminology sometimes kind of get over people's head, but inventory, blah, blah. Hey. Sorry about that. Okay, so, oh, that's not it. Stats, right there. Right here. Inventory turnover. It's just a unit of a number of time the unit has been sold and replaced during a time period, right? So the lower, the better. Okay. And so we're up to 6 right now, so we're trying to do it lower than that. But hey, 6 is good. But if you look at other retail store, so let's compare that one. Let's do Target. What is Target? Target is 6.15. No, 6.125. So GME is at like a little bit lower than that. So we're faster at turning over inventory. All right, I'm back. Sorry, my microphone back then was so crazy. Guys, look, it sounds terrible. I hope the microphone is a lot better. But anyway, so in that one, I'm sure I played through the most. I didn't even actually listen to what was being said, but I hope it's informative. Back then, of course, the price was $11. Nobody paid attention to it. At the time, we were at like $6 million. You know, if you went through that time period, people were like, "Oh, we have to wait another year for GME to make another $6 million." Well, guess what? Where are we right now? This is 9 months, okay? 9 months later, what is the balance sheets right now? Okay, well, 9 months later, what are we making? Sorry, overview. 10 times that. In 9 months, we 10x the amount that we made back then, or in net income, okay? I know people are going to be like, well, because they were diluting. Okay, so if they dilute that much and they're still up, what do you think is going to happen the next time they dilute? You know, I'm not saying that, you know, people going to keep coming back to buy this stock. Maybe it's not retail. Maybe institution's going to FOMO into this. Have you thought about that? You think that institution knows what we're like? Most of these people are just followers, okay? They follow their own friends and all that stuff. So that's why I'm so bullish, because again, institution is too late to this. If they even want a piece of GME, they're going to have to buy it from us, retail, you know? And if you are kind of short-term minded, you might not know the value of your, you know, the price discovery hasn't even begun. This is not price discovery, you guys. This is just people, you know, bet up and down on the option chain, I'm sure, you know, because again, this stock doesn't move when the option doesn't, you know, give the, you know, the sentiment. So the reason why you think, the reason why I think that the stock goes up right now is because the option is turning bullish. Okay, and again, to the tune of $10 over the max pain, that is monumental. You guys don't underestimate this. You know, I know I'm trying my best not to hype you guys up, because I'm afraid that people YOLO on calls and all that stuff and doesn't know what to do with it. If you know how to do option, do it, you know? I'm not discouraging you from doing it, but just be careful for people who don't know anything about option. That doesn't mean you can't participate. You know, yes, you could participate in the growth of this company, but you have to think about it in the long term. Yeah, just common sense. Okay, what am I looking at here? Okay, so let's take this out. Now, the reason why I was looking for a different one, you guys, a different one, because okay, when people are not paying attention, what were we talking about? True Testament. I was talking about the gap when Ron Kitty came back. I think this is when he came back already. What's next? Power hour. Okay, this one, best time to buy. See, I love stocks like this, you know, when people are not paying attention. You see the despair in people, you know, and of course, not any of you guys, because you're my viewers. Mostly my viewers are more well-versed than me, actually, on GameStop. So I'm doing this just for a few stragglers out there who, you know, who come to my screen for the first time. The price drop. Just know that. Okay, one second. Talk about GameStop, but okay, let's see. I feel like I sounds the same, but let me speed myself up here. I feel like I'm too loud. not really, right? So 15 hours ago, he was saying what's become clear for most company is its exit environment. Okay, now I don't understand all this, but let's try to kind of dissect it together. Growth without profitability is insufficient. Okay, profitability without growth is insufficient. Okay, profitable growth is required. Okay, this dynamic could change if rates changes. I think he referred to like the Fed rate fund maybe, but seems to be the current state now. It's a bit cryptic, I feel like, but from my understanding, I just think it's he's talking about, you know how people are like, oh, there's no growth in this company, right? GameStop, and then they flip flop. Oh, there's no path to profitability, right? Right, we show that we are profitable just by operating at a smaller footprint. And so again, like all of these are possible. It's just that you need a change, a rate change, right? So perhaps he's referring to like Federal Reserve. When's the Federal Reserve change their course in stimulating the economy again by lowering the rate and all that stuff, perhaps, right? This is my own interpretation here. All of these stuff will change in a minute, right? So meaning the capitulation or whatever terms you want to give it, right? So okay, 1 second. Twisting their mind into a pretzel to make this company a villain at some point, for some reason. Hey, Jake, what website should I go to for trademark?
That's a
1018, is that the one? 1018 is not, but okay, so I need to. Okay, let me address this real quick. So it seems like this one is still in play, but I have to do more research on that one. But yeah, I mean, again, they were doing their best, to come up with the best, solution for, for the economy that we're going into. I'm sure they're still developing in this aspect. But back then it was Matthew Furlong, so it's worth noted that too, because Ryan Cohen didn't come in until later on. Wait, hold on. Wait, when did Ryan Cohen become president? CEO. I think Player was under Matthew Furlong, right? Correct me if I'm wrong, people. Please understand that. Forgot about that. Player. Let me pass through this one. Okay. I'm sure you guys could go. Negative. What is the problem? Oh, interest expenses. So we got interest. That's why it's an income. Okay. Very misleading. They should do interest income instead of minus like that, right? So minus means that we make money. Okay. Expenses meaning that we have to pay an interest. So just take a note on that. Now, people were giving GameStop a hard time based on the operating expenses. I made a video explaining that already. Hopefully it makes sense to people. Yes, we're not quite there yet, but we're about to flip it, right? You see the gross profit right there? Is a little bit lower than the operating expenses, right? But it used to be a lot steeper if you look at the difference between the past, right? So the gap is closing on it, and it's about to inverse the other way. So we are at that level right now. So while people didn't project ahead of time because they saw an operating income, and of course the media is going to hone on this a whole bunch. They would show a 9-month, they would show a 9-month number because the month that, first quarter, second quarter, and third quarter is usually the worst time for us, right? As retail in gaming. It's cyclical, obviously. It depends on, game cycles and all that stuff at the time. And so, we don't typically make, money unless there's big release on, new games in summer or whatever, right? But typically most of our profit comes from, Christmas and Black Friday sale. And so, the media would use that number to say, oh, look, Jimmy lost $60 million in 9 months, But if you were to do a trailing 12, you would have seen a different picture. And I even did a video on that too, you guys, This is a throwback. Yeah, I'm kind of a bit hungry. That's why I'm like, let's just play my old video, huh? Why not? Since I have more audience right now. I'm sure most of you probably see it already, so don't mind me. Let me see. Let me see which one I like to play. Okay, I think it's this one here. No, that's I want my saw that one already. Jim Cramer, Cash on Hand. This one is about private equity. Again, these things happen, you guys. Like when Marantz is telling you, what Marantz is telling you is, it's been, written by, people have been following it, and that's the playbook. So they, planned the board of director into the thing, and that's another arms of the whole story here. But why don't they give me a list, you guys? Crazy. And this is nine months ago. So here's what happened 9 months ago. Hi guys, back with another video. So this one is going to be a pre-recorded one. I want to interact with this particular video real quick because I know like there's a narrative here that kind of coming to play anytime there is the best time for you to get into GameStop. This is usually what happened, or at the very least they want you to sell into the loss, right? Now this type of negative sentiment has been coming to GameStop many a time, so I just want to kind of showcase this type of thing over and over again, just to tell you that the media is out there that have bad intention. Of course, like again, it's in perspective here. In their opinion, they're trying to save you from losing money, right? But in my opinion, I think that they have not done that, in the decades on end that I've ever heard of, right? They don't seem to care about retail that much. They only care about making the institution money, right? So we all know that CNBC is owned by private equity. And so these type of things is going to come out of their segment all the time. And this is why it's so skewed towards GameStop being a terrible company to own. Long-term or not even long-term, just a short-term trade even, right? And so let's look at this one, and I'll come back after.
On Wall Street, Trump media tanking. Company reporting a net loss of $58 million last year. They had just actually a couple of $1 million in sales. But it wasn't just them. Investors in AMC, Reddit, GameStop, and more also got whacked today. Which kind of brings up an...
You see all this, again, these three companies has nothing to do with commons, right? In common. For some reason, they kind of couple AMC and GME and, the other stuff. But watch what the segment is trying to get you to do.
Wild swings in meme stocks, not just today, but going back months and years. Are they a good or bad thing for retail investors? We know it sounds weird, right? Nobody wants to lose money. Up good, down bad, unless you're short. But I think there can also be lessons in losses. Let's talk about it with the godfather of retail options trading. That is Tom Sosnow, founder and CEO of brokerage firm Tasty Trade. Tom, don't want anybody to lose money. But the point is, especially for the noobs out there, newbies to the game, there are powerful lessons in understanding not only, taking losses they hurt, but minimizing and mitigating risk.
I think the whole meme stock going back to 21 and what we've seen lately, Brian, is just, I know people are going to say, losses are bad and this and that and jumping on, these hype stocks is bad. But the reality of it is if it engages people in the markets, it gets people to be self-directed and manage their own money and make decisions and learn how to be strategic and learn how to be smarter investors. I think that there's no downside to it.
You see, like this is deliberate, the show of losses, as you see, right? And of course, like AMC, we know what AMC is, 94%. And then GME, of course, again, we know what GME is. It's 56% from the high of the, the whole meme stock saga type of, move. Now, of course, this is a TMTG. That's a Trump stock, right? People are social, truth, social, whatever. And then the Reddit. Now, note every single loss, every single screen out there, it's always showing these type of things, right? And watch this guy. What is this guy trying to get you to do?
Oh, we just called you the godfather of retail options trading. So godfather, I can't do the accent. Help us out. You come to me now. Give us some lessons, basic things that your audience, our audience could and should be doing if they're going to play in that game. And it is a game.
no question, it is a game. And you know what? This is a game. The most important thing is, first of all, you got to realize that some stocks like AMC and like GameStop, I mean, they're kind of old news. And I'd probably stay away from both of those. If you're
stay away from both of those, right? Of course, it's old news. Now it's old news. It wasn't old news before, right? And again, like they want you to stay away from GameStop and AMC. Of course, stay away with AMC. We know what AMC is, but for GameStop to be in that same category, it's so disingenuous, right? Now, all of these companies, except GameStop, are losing money. GameStop is actually making money. So that's why it's such a disingenuous way to go about covering this. And again, they do this intentionally, okay? Let's continue to watch.
For some kind of crazy upside explosion or some cheap upside calls or something. I don't like it. I don't like either of those plays. But if you're interested in DJT or you're interested in Reddit, those are both interesting plays with some pretty wild, there's tons of liquidity, 18 million shares, I think, traded DJT today, 13 or 14 million shares of Reddit. And they have very deep, relatively liquid option markets in Reddit, okay option markets in DJT. But if you're a strategist and you want to enter a game with high volatility, and in one case, DJT with a lot of interesting put skew, and the other case, Reddit with a lot of interesting call skew, meaning just the velocity of risk is one stock to the upside, the other stock to the downside. Those are both really cool plays.
Okay, you said put skew.
So again, they want you to go to get option, which is a very risky way to make money, right? Or lose money. Again, like learn about option and you wouldn't understand how diabolical this type of advice is, right? For investor. Like in a long-term investor, obviously you don't want to do that. And again, these people want you to lose money by betting up and down, whatever, right? When you are betting up and down, you're actually making them money. Who is them? Market maker, people who are owning this particular channel. They want you to buy, sell, in and out, going in and out of a stock, right? So that they could skim pennies out of you. So that's the whole playbook here. They want you to stay away from GME, have you think that AMC is the same as GME, right? Every playbook or every single thing that they could do to steer you away from GME. And they're doing it again, right? You have these people coming over saying GME it's not a buy or shitty company and all of that stuff. But I hope you understand that. I'm not gonna go any further. So if you want to go and look at that particular video, you're welcome to do that. So I'll just end it here. Again, I hope that's informative. Let's see. Awoken sheep. Nice handle. Haven't seen any from you. First time watching. Diddy on GameStop is always good. Okay, cool. From that comment alone, I know that you're a long-term investor. That's good. See, again, this time around, I feel like a lot of people, more and more people, I'm not nearly enough, obviously, because, the share price will tell you so. It's just that because Rowan Kitty has been kind of tweeting again, the media has been covering it a lot more, but again, in a negative light again. And not enough attention is paid to the fundamental, and this is why I hone on it. And Marantz has been doing it for 4 years, and his channel is just so too small for what he's been kind of promoting. Again, smaller channel are the testament to the growth of the sentiment about this stock, truthfully, okay? And so that's why I'm thinking I'm still early to this play. So early that I spend most of my time accumulating and most of my income, going towards that. For now, of course, yes, I'm gonna take advantage of the price action as well, because I'm planning to buy a house. That's my goal, is that, within this couple of years, hopefully when the stock market's going down and, the interest rate going higher, that means the 10 years, people are not going to be able to buy the house, right? And my goal is to buy it outright, if I can, right? Again, I'm hoping to own some real estate here. And so GME is one of the vehicle that I used for that in my trading account. And again, I have my moon back as well. So, those are the strategy that I have to employ to take advantage of this run, as well as the long-term, value for this company as well. And so I'm telling you, I'm prepared for everything. Yes, I do have option too. So we'll see how well I'm going to be able to do it in this particular time around. But it's very encouraging for me to see the evolution of, retail investor has becoming more and more educated on the macro, understanding, hey, inflation, recession, and, the economic ramification for the inflationary time, the hyperinflation due to, money policy that doesn't make any sense. That keeps people like this, coming to you and say, oh, you shouldn't buy commodity right now because it's not performing as well as the tech stock, right? And they would push NVIDIA to you, and there you go. And then Unity and all that stuff, like, oh, perhaps these long forgotten stock has been coming back. And so there you go. Every play in the book. But again, to me, the growth of GME is inevitable. You cannot stop this from happening because this is genuine company. And going back to institution, though, I feel like institution is going to come to realization about GameStop and it's going to reprice GameStop. And by the time they are able to accumulate, just like Bitcoin, right? Think about this, okay? I think that's why I had Bitcoin. Just like Bitcoin, I truly believe before Bitcoin become, they were missing out on the growth of Bitcoin because they were ignoring retail sentiment. That retail was just dumb money. What do they know about Bitcoin? Oh, shoot, what is going on with am I still on? I think I'm still on. What is this? Okay, so XRP is going up right now. That's cool. It's good to see. But yeah, so I bring up Bitcoin a lot because again, this is where my my bread and butter back then. I went back recently to look at my history when I started to accumulate Bitcoin. And again, this is what, kind of taught me that long term is always the best way to go about acquired asset in general. Whether it's a company, whether it's some sort of security, gold, or whatever, right? That if you are in it long enough and you understand that this type of security is going to go higher in price, inflationary or whatnot, because of the money policy, you're not going to ever sell your asset, out in order to, unless you buy something else with it. So that's why I'm planning to buy real estate, hopefully, right? Because I hope to own real estate one day. And so I like to dream. I have a big dream here, but we'll see if I could achieve it. I'm sure all of you have the same. So I looked back, and this is when it's I think June 12th of 2018. It's crazy, and again, this is where I'm making the bulk of my, portfolio here. Now, at the time, I didn't have enough money, to go all in or anything like that, but I do earn quite a bit, sorry. I have some earnings, and I literally, kid you not, I started with $7 a week. $7 a week. And at the time, Robinhood was around, and Robinhood was the only platform that I could buy crypto. They just added like one of the new platform back then, that you could buy crypto. And so, of course, I didn't buy that over here because back then it was just, magical. The same narrative that, I heard from people is, don't worry about those. It's like, they're just retail. It's very risky. Look, it's down 5% in 2 seconds, right? But because it was like a new asset class of some sort, it's just, again, people are naturally betting it up and down. And it was due to the ebbs and flow of the market There's no algorithm that will suppress it or anything like that. It was just people buying and selling at the time. It was pretty difficult to get a hand on Bitcoin, the real Bitcoin, not the one that you got from ETF or anything like that, because of the supply at the time. It was kind of well saturated, by retail. So retail usually just buy and sell like crazy, right? Like antsy. I know it for myself because I do that even till this day with the XLM. I miss out on the run because of that. But again, I'm human. I'm still, have that antsy nature in me. But here's what I've learned. Back then, I started with $25. Anytime I have the amount of money, some days I have like $100. Some days, some months I would have $100, but I've been accumulating. It wasn't until this time here that, again, throughout this 2 years, I was accumulating. I didn't even care what the price point was. Because again, before that, I learned about Bitcoin. I understood that it was like some sort of trading thing. I saw it at $200 at one point and just forgot. I just didn't pay attention to it at all. Because again, I couldn't get it on Robinhood, right? So when Robinhood kind of become more popular, by the time I pay attention to it, it was like $18,000 already. I saw this spike right here. And that's when I began to study the structure of the market, right? Began to take it more seriously. Now, by this time, of course, I had, Ford shares, like a couple, like very small amount, you guys, And so the learning experience for me from Bitcoin is the fact that had I held everything that I own now, I did take advantage of this. Remember, I accumulate down here. Okay, the same thing that I'm doing with GME as well. And this is why when I hear a lot of negative sentiment about anything, my ear perked up. I'm like, okay, why are they telling me this? Right? Why are they telling me, oh, Bitcoin is down, crashed, the headlines, right? Bitcoin crashed 20% today. Same thing, right? The GME crashed down 20% after earnings. Same exact thing. Because they want to scare you away from the asset that will become something one day. The key is to stay here long enough for you to benefit from that price discovery. Okay. And so, yes, I know there's so many negative sentiment. I'm sure if you go to the media back here, you will see all kinds of articles saying that, Bitcoin is dead. Bitcoin is dead. Sell now or you're never going to come back. This is during Corona right here, around $4,000, right? Had you grabbed at that price, oh my God. And again, this is where millionaires make on the dip. If you have cash, okay? This is why cash is so important. I don't understand why people don't realize this at all. At all. And they want Ryan Cohen to buy Bitcoin at this price, right? At the high, all-time high. Not to say that there is no cycle here, Yes, there's some cycle here, but I bet you anything, Ryan Cohen's going to buy Bitcoin, but not right now, at the bear market. When Bitcoin go through a winter, because again, right now it's more kind of like a sure thing, right? Because Trump is kind of like pumping that industry right now. So I'm expecting a lot. I'm expecting, a firework here into this crypto industry. And really, this is where, oh man, that's why GME is so important in my portfolio too. And of course, yes, when I'm in altcoin right now, right? Let me see. I don't have many Bitcoin right now in terms of dollars amount. I do have some, not crazy, but I'm doing this to eventually will come back to Bitcoin at some capacity. But what I'm trying to time is the alt market, which is XRP, XLM. Okay, why do I talk about it? Because I've been in in XLM way before anyone talked about it, when it was like boring to buy, you know. Because I was in Bitcoin, I am kind of aware of like the, altcoin cycle, and it seems like every 4 years it does this, right? And so I accumulating around here, and just like anybody else, I was expecting XRP to skyrocket along with Ethereum, and so see, when I see this type of thing, that's when accumulation. This is where you want to do dollar cost average, buying it consistently at the low. You buy when things are boring, you guys. You like right now, people won't want you to buy it. Like, I'm not saying it won't go higher, but it's more risky for you to buy up here. Right? Yes, you could ride the momentum. I ride this momentum here and make some, but again, it's more riskier than buying it down here. So when the SEC, and this is what clued me into why XRP was important, because of the SEC. Okay, the SEC lawsuit happened around here after with Jay Clayton. Okay, Jay Clayton was the one who, and I talked about it. If you go back to my old video, you'll see it. I'm not trying to pump it to you today, so do whatever you want with your money. I'm just trying to tell you my logic in investing in this. When the SEC lawsuit comes, they sue Ripple personally, but they didn't do anything to ETH. So in my mind, I was like, okay, why do they don't go after ETH? Is ETH overvalued? Right? Because at the time, people were like, oh, ETH is going to be the future. And even, back then, I'm not saying that ETH is useless. I'm just saying that perhaps it's overvalued. Okay. And I'm thinking, okay, so they go after Ripple, at the time, the company, for, selling. Oh, sorry, 1 second. 1 second. Let me tell them real quick. Sorry. Okay, so yeah, so when the SEC went after Ripple, that's when I was like, oh, okay, there's something important about the XRP that they don't want you to realize. Perhaps they try to stifle the innovation of, again, money transferring and all that stuff. I'm not going to go through that, but and so I've been accumulating. It's like, I hope I had more accumulation. When that happens, crypto kind of like cratered. And at the time, Jimmy had the, NFT marketplace. And I truly believe that the innovation in crypto they would have promoted it. But because GME, got into crypto, they don't want GME to thrive. It's conspiracy? I don't know. I'm in a cult, so please forgive me for thinking this. But ETH was kind of like pushed to the masses, and so they were able to kind of like steer people to FTX. Remember FTX, the scam company that kind of related to Gary Gensler, the current chairman. And again, FTX was promoted in where? these platform. Go back in time. You know, they were putting the CEO of FTX on Forbes list. You know, oh, this is the truest CEO. He's doing this for altruism purposes, you know, being a good person, right? Meanwhile, you know, and they are minting. And what is it? GME coin? I'm sure there's a lot of that being traded on Ethereum right now, Ethereum network. And also Solana has been pushed as well. So again, you have to understand like the the psychology of this type of thing. You have to weed with, I don't know. Try not to say too much because people might think that I'm crazy. But that's what clued me in. I was like, okay, this is more important than they want me to, you know, realize. So I accumulated. Like I said, I wish I had to accumulate more and more and more, but because of the uncertainty, the, you know, regulation uncertainty, I wasn't, you know, bullish enough. In hindsight, you know, I would have been doing just fine. Because at the time, you know, it's hard to buy XRP on the exchange because of that lawsuit. And so unless you know where to buy it from and switch, you know, I used to buy ETH on chain and then trade it into XRP, you know, for a fee. And back then it was like 5% slippage rate, you guys. Like, it's crazy. Even like right now, if you trade any crypto on Robinhood, it's like what, 1% per trade. That's crazy. So that's why, again, that's why they encouraging you to buy and sell, because they skim that pennies off of you. They are unable to you know, get money from investor. That's why they don't want you to like invest and rest for retail, because they don't make enough money for that, like, yeah, throughout that transaction. Liquidity provider or whatever, you know, that's what market makers does, you know, to the market, and that's how they make the market, because they get the most, right? But for some people, it's not enough, so they have to trade against retail as well. So that's why you get the GME on that. But anyway, so all right, you guys, I think I'm kind of tap out at the moment, and I'm gonna have to make a phone call. So I will let you be. And oh my God, thank you so much for, you know, listening to me rambling on and on. I don't know how you guys are doing it, but hopefully, you know, I mean, you're in a cult, so I mean, what can I do? But yeah, you guys have a good weekend. I will let you know when I'm live again. Typically around weekends, that's when I have the most time to kind of like ramble on about GME and just, you know, the whole economy in general. But yeah, go watch this particular segment. I'm gonna finish that after I get off of this, and be careful, you know, whatever the new play is of the day, just be careful, you know, make sure it's don't fall in the trap of GME 2.0. It's not gonna happen, okay? GME hasn't happened yet, and they want you to think that it's over already. Think about how many documentaries they've been making about GME already up until this point. You could count them, probably 10, 15 already, to try to convince you it's over. Well, it's remained to be seen, right? We'll see. All right, guys, I'll let you go.